Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call, coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Surabhi. Guys, good morning. And what's the word, Nigel? You were singing a song. It's Decembering.
It's beginning to look a lot like Christmas.
Already getting the colors of the season, right? Nigel's all set. But before we get to the end of the month, there is the beginning of the month, and there is such a ton of news flow, right?
Yeah,
I mean, local
absolutely.
and global, and the GDP numbers, and some changes in the cess on tobacco. Whew, lots to go over.
Well, that's right. Markets will be tracked, but a lot of macros flowing in. A lot of big central bank action is what we are tuned into, and that GDP number looked good. Is it a good thing for markets or not so good? Well, we'll find out.
The real number is good. The nominal one, perhaps,
not
a little,
soft.
softer, right? But let's just take it from the top. As we'll, of course, talk about the GDP numbers, but also there's a lot lined up here over the next 4-5 days, actually more. First things first. The sentiment and the mood and the all-time high, I think a clear discrepancy. The Nifty hit a new all-time high last week. Market was up about 0.6% Friday to Friday, but the mood remains watchful. I mean, actually, I would even say like slightly pensive, especially as far as broader markets, portfolios, mid and small caps, etc., are concerned. And I think this number, it's 2 days old, but I think it's still relevant, would not have moved around so much. 170 out of NSE 500 stocks are only actually 170 out of 500 NSE stocks are higher from the time that the Nifty actually made a new all-time high, September last year. So that kind of talks to the overall action in broader markets. And, we'll have more on this a little later. Now, GDP numbers, and this was, of course, the bright spot. The real GDP growth accelerated, 6-quarter high, 8.2%, third quarter. This is July to September. But the nominal number actually decelerated a little bit. The deflator, inflation has been running very, very low. And lots of conversation around this one. Remember, for markets, what matters is not the real number. For corporate earnings, what matters is not the real number, but the nominal number. Corporate earnings are related to nominal GDP growth, and you're tracking under 10%. This will be the third straight year if we actually end up somewhere there. So I think, it needs watching. In terms of estimates and what the street has done, I was looking at what Goldman, etc. have done. They've all taken up their estimates for the full year a little higher. Now, the other data point which came, and I'll come back to this a little later, is that, so this is July to September, but we also got April to October tax collection numbers, and tax collection is running far lower than what was budgeted. It's around 4-5% compared to 11-12% which was budgeted. So that's the other thing which I think is important. Perhaps it's a slightly more recent since it covers numbers till October. Now, November auto sales numbers today. Again, one more data point which markets will get, which basically will tell you if the GST-induced sales momentum that we saw pre the GST cut becoming effective, and of course after it, is continued into the month of November or not. Today is the 1st of December. So we'll get those numbers over today and tomorrow. Winter session of Parliament kicks off today. There is, of course, we've reported on a bunch of them. Insurance Amendment Bill is the big one, and we've reported on it extensively. But there are 10 key bills in total which the government is looking to pass. And yesterday evening, we reported that the finance minister essentially is going to introduce a health security, say national security cess bill in Parliament today. So from what we understand, and there is still more clarity which we will get when that bill is tabled, but this will replace the compensation cess with this. So in terms of effective tax rate, there is no change, and the stock in focus will be ITC, tobacco companies, by the way. But there's some talk about whether, even though the effective tax rate remains same, the tax will be applied on the total capacity and not the produce and not the production. So, how will companies respond? Will they bring down rated capacity and things like that? We'll discuss this. Russian President Putin to visit India from the 4th, basically 4th and 5th, he's going to be here. 5th, he's going to meet Prime Minister Modi. And India is trying to push a new arms deal. So, again, something which, and we talked about this yesterday. For everybody who's waiting for a US-India trade deal, I think it kind of gets pushed out a little bit more with the Russian president here. RBI policy decision on Friday. A lot of chatter whether with the 8% plus and a beat on GDP, a rate cut is warranted. but I think the markets are expecting a rate cut nevertheless. So that is something. In terms of the Fed and the FOMC, I think markets are now almost fully pricing in a 25 basis point rate cut. That's on the 10th of December, which is next Wednesday, not this week, but the next week is when we will see that. Now, yesterday, OPEC Plus essentially agreed to stick to its pause plan, no more output increases during the first quarter, which is January to March, because they're talking about too much supply in the market, etc. U.S. Secretary of State Marco Rubio called Ukraine talks productive as the Trump's special envoy is headed to Russia. There is that thing which is going on, but nothing very firm yet. That's it. I mean, so lots of local news. Is some of it really market moving in that sense? We'll find out. Auto sales, etc., especially, and of course, clarity around that CES. But otherwise, I mean, the mood, of course, remains watchful, as I said, especially in the broader market. I'll just tie in with the levels here. So all-time highs, 26,310 for the Nifty. Immediately that's the number to take out. Support is a 20-day, which is, lagging behind, 25,886. The Nifty Bank record high is 59,897. So that's the level on the upside, and the support is the 20-day, which has moved up to about 58,618. GIFT Nifty will give you a sense of how we likely to start, and then we'll pick it up from there. 100 points, 120-odd points higher on the GIFT Nifty. Nigel is standing by with the F&O positioning and the stats as we start December. Nigel, over to you.
Well, the GIFT Nifty is suggesting a big bump up, and the bulls will hope that we end closer to the upper end of the range. First up, the markets will be reacting to the GDP number, and in absolute terms, it's better than what the street was working with. In fact, Macquarie points out that it's at a 6-quarter high, which is good news. However, the probability of a rate cut now falls from around 65-70% to around 60% or thereabouts. So will we see that rate cut, which the stock markets are expecting at the end of this week? That's going to be the big question. And that lower inflation number is always going to be a double-edged sword, right? Because you'll be celebrating lower inflation, and that gives the RBI the room to go ahead and cut rates. However, nominal GDP at high single digits means that earnings growth can be only so much. So those mid-teens earnings growth comes in doubt if a nominal GDP is in high single digits. So that's about the macros. What about the flows? Well, the FIs, they continue to remain sellers. Now the selling has got a little bit bigger, 3,500 crores. The DIs, though, they're taking care of that, and they have, institutions net were buyers. Not too much is what we saw in terms of movement from the FIs on the index futures. They continue to remain net short, 81% of their positionings on the short side. However, in absolute terms, it's much lower than what we have seen. Remember, in the last few months, we have even seen 1.9 lakh contracts on the short side, 1.6 lakh contracts on the short side more recently, just around 10 trading sessions ago. So the FI is short, but not aggressively net short like we have seen in the past. What about the options data? Two strikes call for attention, 26,300 call, the 26,100 put. Premium on both those two, around 50 to around 60 rupees on an average in Friday's trading session. And writers have been making money because the markets have gone into a bit of a range-bound mode. So you just punch in, both these two premiums, and you'll see on the upside that 26,350 going by the options data becomes a bit of a resistance. The recent high is something that you'll be tracking, 26,310, and we could visit that at some point, at some part of the day during today's trading session. In terms of support, the options data suggests 26,000, 26,050. That's going to be the first support level, while the 20 DMA, that becomes the important level that you don't want to breach on the downside. The Nifty Bank has been leading the way. That needs to continue to do so. The 20 DMA is rather deep on that particular one. Cues that we're looking forward in this week itself, the domestic cues that I'm talking about, auto sales numbers start trickling in, gives us a sense about, how the markets are looking. So we'll have to focus, on that in terms of the auto space. GST collection number as well will be due today, so we'll keep an eye out on that. And towards the end of the week, the RBI policy will be coming out. So hopefully we get that rate cut from a stock market perspective. But more than the headline index, you need to keep an eye out on the broader markets because that's been crumbling, actually. Stark underperformance is what you've seen from the mid as well as the small cap index. And if you ask me what would be on your wish list, I wouldn't mind the Nifty consolidates a little bit, but we start seeing performance from the mid as well as the small cap space. Given that we have big central bank action due in the next week or so, both on the domestic as well as on the global front, you'll keep an eye out on base metals, and overnight you have silver that's moved to a record high, so that's going to be important. The plays are Hindustan Zinc, the only direct play out there, and Vedanta because it's a parent of Hindustan Zinc, and since copper as well has made another high, we'll keep an eye out on Hindustan Copper. So base metals and metal-related stocks will be on my radar.
Okay, fair enough. So those are the cues to watch. By the way, while we're rejoicing that strong GDP print, the macros out of China this morning are not that great. The private sector manufacturing report has come in. It's lower than estimates for the month gone by, and also it's showing some contraction. So a lot of the Asian markets have turned. the mainland Chinese market and the Hong Kong market. Hong Kong is still up 0.5%, but it's well off the high of the morning. And Japan, for instance, some of the big markets like Japan, down almost 1%, 1.5%. So mixed picture across Asia. We'll pull up the implied open. The question is, will the bulls find their mojo back? Because last week, while we hit that all-time high, the momentum was missing. So will that momentum come back in? That remains the biggest question.